Good morning, everyone. Welcome to our Wednesday morning trading session. One moment here while I get the screen share going on. Looks like we're opening to a substantial gap lower. And it looks like there's some much needed volatility come into the market. So here was yesterday's trading. And then the markets closed and we saw the Asian session fall off. A little bit quiet through the European session, although they did seem to tail off a little bit as well. And here we are opening with a huge gap above the market. Lots of gaps the last month, really, with the market going all over the place. For the most part, it's been very, very slow, but I don't know. Of course, yeah, like Steve says, it's not huge, but huge. I was tempted to do my Trump impersonation. I was restraining myself. Okay. Here on the Raptor, you can see we had a nice cloud crossover signal almost an hour before the open, hour and a half before the open. Now we're producing a couple counter trend signals, coming back with a hard edge bounce. Again, this is all just a minute or two out of the gate. I'm going to try to restrain myself here a little bit. Oh, here we come back with yet another counter trend signal. You know, with that gap beckoning, I almost feel better buying than selling. And there's a nice second push entry opportunity. Notice how the market has flinched after producing the signal. All right, here. First, let's get the order in, and then I'll explain. Did they slip me? Nope. Okay, counter trend trades, of course, by their very definition, very risky. This is early. Let me see if I can't run this one out. I'm going to delete my profit-taking order. Oh gosh, only 3 minutes into the session. That's early for me to be a buyer. But it's a single contract. The good news is I know where to cover the position. That's the only good thing about a counter trend trade, is you always know where to say, I was wrong, time to go. Yeah, Andre says, I think regarding that gap, that opening gap, not nice but tempting. Yes, sir, that is a very tempting gap. Come on, let's go. I'm not sure the whole thing will fill. That's a lot to ask, but even to get here above the primary resistance line, there we go. I'm going to move my auto break even just a little bit further. Get some of my stops ready. break even now because I'm a chicken. Scoundrels. Yes, we're here into the hard edge on the Eagle and the Raptor cloud, and that's kind of where the sellers are deciding, hey, let's step in here and support our trend. Well, what are they going to do? They're sure fighting it out. So, as usual with those counter-trend signals, I should have just taken profit on target. Boy, I'm getting tired of saying that. Slow learner, I guess. Okay, we're going to get another signal and a late filter entry signal here in the Falcon, which I might give a go. So the late filter entry signal occurs when the filter goes out of sync and comes back into sync, but the trend line never changes color. Now you're probably wondering, well, Eric, why are you already placing your order? The filter has not come back into sync. When this bar closes on the high, which according to my logic counter will be 56.89.5, it will flip that filter over. It will make that filter green. Just something you pick up from experience. See? Told you. See how it changed over? Yes, I know, Steve. Steve says you've got your first in-sync Eagle signal. And we do. And fortunately for me, it has not triggered yet. So it's removed the temptation to try to short when the rest of the tools are looking a little bit more bullish. The Hawk looking slightly more bullish, the Raptor slightly more bullish, and of course the Eagle slightly, or pardon me, the Falcon slightly more bullish as well. So let's go now here to the Falcon trade. Boy, we're getting a lot of opportunities. My goodness, we've had 2 trades already, or 2 signals already. And we're only 10 minutes into the session. Yesterday, I think we had 2 trades all session. So I'll leave my profit-taking order in on this one here at 56.95, just before the median line. And that's a surefire way to make sure the market's going to run out even further, maybe even get up to 57.04 or 57.12. Well, 57.20, that would fill the gap. That's how big the gap is from the overnight. 1, 2, 3 full zones. But again, it's counter trend-ish. David's asking about the trend line here on the Falcon. This is unique to the Falcon swing trader. Now, if you're trading the Raptor, of course, it does incorporate elements of the Falcon, especially as far as the signal generation goes. This would be the comparable signal here on the Raptor. Because the Raptor is a hybrid, it tends to sacrifice quantity of signals for quality of signals. And staying with my hybrid analogy, it's like a hybrid car. You know, the Raptor is the Prius, and then you've got your DTS birds, which is like a Corvette or a Ford pickup. Right? They're a little bit more specialized. A Prius will get you from A to B, just like a Corvette, but a Corvette will be faster. And you can still, you know, move your bookcase and suitcases and whatever in your Prius, but not as efficiently as you could in a Ford pickup. And that's not to say the Raptor is less efficient. That's where my analogy kind of drops the ball a bit. Just to say that the DTS tools are a little bit more specific for their programming environments. It's not like you're missing anything, though. We will get a Raptor signal here. Once the Raptor feels that a new trend is in place, we will get a #1 cloud crossover signal. We're fighting it a little bit, though. Doggone it. All right, I think time to do a little adjustment of the stops. All right, that's all you get. So I'm looking at this little itty bitty swing through here. Trend line, of course, trying to change color. It's already turned a little bit pinkish on me, a little red. And looking for the buyers to show themselves one more time. Ooh, Russell says we might have a rule of 3 signal here on the Eagle. Ooh, sorry. It's getting there. So for you Eagle traders, your rule of 3 signal is your counter trend signal. And what happens is we get 3 signals producing against the band. So the band right now is bearish, but we are producing buy signals. So before we can accept a counter trend signal, there's 2 things we have to have. First, we have to have a trend. Check, got that. Next, we need a test of the extreme, and that I'm not so sure we have yet. The test of the extreme is merely a retest, in this case, of the low and a sign that the market's going to fail and head higher. Now, some people just like to take the third signal, third counter trend signal, and in a very, very strong market, sometimes that's all you get. I'm trying to find you another example here. Market's been kind of so slow or just flat out sideways, I can't find you a decent example from the last week. But you're right, Russell. You're right. That could be part of the reason we're struggling now, or I'm struggling with my trade right here, is we might be seeing a test of the extreme. We might see the market try to slip down here a little bit further. My initial stop is still the best stop. I just don't feel like leaving a whole lot in play right now. Alternatively, you could use this swing low here to cover your trade as well. That would work also. All right, so got tagged on that. And now we are producing another sell signal here on the Eagle. Oh, I was just about to place an order there, and they're trying to get away on me. So we've got a couple things going on. We've got a green bar sell here on the Eagle. We have, oh no, that's not quite a hard edge bounce. Well, technically I suppose it is. The Raptor did not pick it up as such because you see the soft edge of the cloud was already starting to drift over. All right, well, they're content to thrash about here a little bit. I think I will give them a moment to let the dust settle. Sure. Aspen's asking, Eric, when you have a moment, can you explain the different cloud colors and the lines on the Raptor when you get a chance? All right. Well, the clouds, we have the two bands, right? So the lighter color cloud is the faster band, and the darker color cloud is the slower band. Because the clouds are translucent, you see you get this cool looking little overlap. What we're usually interested in as far as the bands are concerned is which way are they stacked. So when they're stacked this way, they're bearish. When they're stacked the other way, they're bullish. And the hard edge. Because when the market encounters the hard edge, we anticipate some sort of reaction. The other lines, these horizontal lines, this is the ultimate support and resistance suite from Indicator Warehouse, and it forecasts 21 support and resistance lines for today's trading. And then I also have these lines here, the dotted green lines. Those are my initial balance lines from Indicator Warehouse, and I use those to highlight the opening range. So the first half hour of trading, I know that right now we are trading at the low of opening range, and the high of opening range is up here at 56.92.5. So that eagle signal that kind of slipped away on me is just above its profit objective. If you're not already at break even, it might be advisable. Andres is asking which cloud has the hard edge. Both do. So here's the hard edge for the faster cloud, and then here's the hard edge for the slower cloud. Ooh, and there they go. Oh, here we go. We got ourselves a cloud crossover signal. I'm just punching into that, and then I will show it to you. So the cloud crossover signal kind of slipping in here because our clouds did cross to go bullish, and now they've crossed to go bearish again. I do need to adjust my stop a little bit. I will pull it back. This is all that we had for a pullback on the cloud crossover. And let's see here, we're almost out of opening range. Okay, so we've hit our profit objective on the first contract. Oh, come on, don't look back too far now. David is asking, and those clouds represent moving averages? Yes. Yes, they do. They're actually custom moving averages developed by Ray Burke from Indicator Warehouse. But I'm sure they can be approximated. You know, moving averages really are moving averages. But yes, that's what they are. They're a lot of people think they're Ichimoku clouds, and I admit they look like them. That wasn't intentional. It just kind of turned out that way. But in that respect, they do work very similar to an Ichimoku cloud, where you can anticipate resistance once you get into the cloud. And if the cloud pushes the market out, then it's going to continue in that direction. Sorry, I can't multitask here. Trying to do too many things at once. So what do we think? Is it time to enable the parabolics? Yeah, sure, why not? Getting a little bit of a hiccup here. Yeah, Russell says so much for that rule of three. Well, that's exactly, you know, why we need to have that test to the extreme before we get too anxious about buying. But there's that in-sync signal, and obviously no trouble at all finding its profit objective. So hats off to you, Russell. Russell's actually the fellow who pointed that out to me. We were chatting one day, and he said, "Hey, Eric, have you ever noticed that first signal in the Eagle really tends to have some pretty good follow-through?" Why, no, Russell, I did not, but you are absolutely correct about that. Here's one thing about opening gaps is they should be treated as a big bar. You know, if you're looking at a day session chart where your data stops at the end of the day, and this is actually the easiest way to identify opening gaps, is if you had like another chart, you know, say like a, I don't know, 5-minute chart or something. So here's the session ended for one day. This is where it starts the next day. So it's quite obvious there's a gap there. And although the market did try to get into the gap ever so briefly, when you see a gap like that, you should imagine a big bar down or up, whatever the case may be, because that's really how it behaves. It behaves just like a great big bar. David, you are just full of questions this morning. David's asking, what's the accelerator thingy here? This, and to be fair, I haven't pointed this out for a while, so my apologies. As I mentioned to you the other day, in order to avoid clutter, I only put one tool on per chart, or one secondary tool on per chart. And excuse me just for a moment here. John, I think, might be in this trade as well. He's saying, where's your target on this trade? I'm going to let my parabolics play this out. Although if you are looking for a hard target, we have moved 1, 2, 3 zones. So right here, this support zone looks like it could be a decent target. But there is a lot of room to move on the short side, which is why I'm going to let the parabolics kind of play this one out. As the profit really mounts up, I will probably go with the bar high-low strategy and go with a very, very aggressive stop. Maybe 2 bars back, 2 ticks off. Okay, so as I mentioned the other day, I've got one secondary tool per chart just to avoid cluttering up my charts here for you in the room. This is the Geiger counter. The Geiger counter is essentially a tape reader. It shows you the current bid and ask. It shows you a history of the time of sales, minus the time, of course. But you can see, you know, the bulk of the selling going through here, the buying. You can see when the sellers are a little bit stronger than the buyers. See how they're a little bit more lopsided here. And now it looks like the buyers might be fighting it up a little bit. See how the buyers are stronger and the sellers, they're absorbing the buying pressure, but right now there's a little bit more buying pressure. The needle itself shows you right now there's a little bit more buying pressure, and this little green line that's printing here around the price bar, we call that the envelope, the Geiger counter envelope, and it shows you the short-term bias. So right now it keeps flashing green that the short-term bias might be a little bit more bullish. And so it seems to be. What I like about the Geiger counter is this dial part. When I see the dial pull and hold, you know, most of the time it'll spend its time bouncing back and forth. But when we see, oh, see how it pulls and holds and holds and holds, if it'll hold there for like 3 or 4 or 5 seconds even, that shows a lot of buying pressure. If you've ever watched the dome, which I'm sure you have, David, but bear with me for those of you who have not. 1 second, I will build you a dome. I think this is the one I want. Yeah, there we go. So if you're watching, ever watching the dome, sometimes you'll see it just chew through the orders one way or the other, right? Like you'll see it, say on the sell side, just take out all the sell orders. Oh, see how it's doing now. Sorry, I must have the magic mouse on. Sorry about that. And what happens is the Geiger counter will be pulled hard over, and that shows you that there's a lot of buying pressure going on and that the market may rally as a result. So that's how I use the Geiger counter. Especially, it was developed because one of our owners said, can you give me a tool to help me gauge when it might be time to get out of a trade? Exactly like John's question earlier. So by watching the Geiger counter, you can see when there might be more buying pressure coming in, and maybe you'll want to get more aggressive with your stops, or even just pop out with profit. So look at all that selling that went on through there. We'll see whether the buyers absorbed it all. That's the other thing. If you see a big move like that and the market does not correspond, that tells you that the buyers have absorbed all that selling pressure and that the market will actually rally from there. Okay, so a couple, well, one break-even trade, one small loss, and one very good trade to start the day. Got to shake the rust off a little bit. Not used to the market moving so fast. Thanks, Steve. Steve says we've got crude inventory in 25 minutes. Thank you. Anthony is asking, can you show me how to bring up a buy and sell chart? I think what you're referring to is that dome that I had up there. So what you want to do is you go here to your control center, go under File to New, and you're going to want the Static Superdome. Dun, dun, dun. And that's going to give you this little tool. And then just select your market of interest. Now you can place orders on the dome by clicking. See, I got an order in there now. Oops, missing a nice counter trend signal here on the Raptor. So the Raptor now trying to make a beeline for the hard edge. Very quick little retest and counter trend signal. David's asking the tape here, the little history on the Geiger counter, is it only showing like the last 10 to 15 seconds? Well, it depends on the speed of the order flow. When we were watching it yesterday or even the whole last week, this could be 5 minutes of trading because the markets were just so painfully slow. This morning, yeah, it's probably about 30 seconds, maybe a minute's worth of trading. But it does depend on the order flow. When their order flow is very brisk, then of course the tape unwinds a lot faster. Oh, I did not know this one, David. David says, I just found out that it is not possible to run both a futures and a Forex feed simultaneously on Ninja 7, only Ninja 8. And to that end, David asks, have you heard how long it will be taking to get the indicator warehouse ready to run with version 8? I'm going to have to refer you to Adam on that one, David. I don't want to sound like I'm copping out, but at the same time, he is the one who knows the answer to that. So if anybody has questions to that nature, you can email Adam, or you can also email Ben. And Ben is support@indicatorwarehouse.com. And he's actually the tech guy who deals with a lot of the, if there's ever a software bug or glitch or whatever. Actually, I had Adam on Skype this morning. I might be able to get him still. I'll shoot him a note. Okay, so I just sent him a Skype message. We'll see if he's still around. David, leave the coffee alone. David was Skyped or put it in the chat window earlier that he was going to put on the third cup of coffee. Here's David's latest question. In a short side downward run, like the one we just saw there in the NASDAQ, what do you understand or imagine about how much selling pressure it takes to move the market that fast, that far? Who is doing that? I.e., who are the big players in the futures, or are there also quants and algos running in these markets? And what percentage of futures market activity is comprised of the relatively small individual private traders like most of us here? Okay, all good questions. Oh, shoot, and I just missed a number 3 signal here. Nice little hard edge bounce. All right, let's see if I get a second push opportunity on that. We might get a red bar buy signal that we can short the failure of. But, okay, first part of David's question. How do you understand or imagine how much selling pressure it takes to move the market that fast, that far? Okay, it goes back to the opening gap that I mentioned. Right, so we have a market that left off up here and then opens way down here. We see it attempt to get into that gap and then fail. That means that this gap is acting as one great big bear bar. If you saw a bar like that form on your chart, you probably would not even think about trying to buy it. All right, so just the way the market played out tells me that there's probably going to be a pretty good push to the short side. And the opposite would be true, of course, if this were reversed. And we've seen that before too. In the last couple of weeks, there were a lot of big open gaps where the market, finishes down here and then opens up here, and we see the market try to get into the gap only to reverse and then take off higher. So opening gaps are very revealing in that respect. They do make trading a little bit more difficult because I think it was Andres who pointed out that gap is very, very tempting. It is very tempting to try to get into that gap to buy it up. So that was my clue that the market might be trying to run up. And here we're actually getting a buy signal. There's our number 2 signal to buy. So we've had our test. Hold on one second here. Got to clean up. Okay, so we've got a downtrend. You can see we've already printed a number 2 signal here. There we go. We have come back and test the extreme. In this case, the extreme is the low. And it has failed again, and it's trying to move higher. So you're asking yourself, well, Eric, why did it not print a number 2 signal right here? I'm not going to show you right now because I don't want to mess up the trade, but we have, with our Raptor parameters, we have that soft edge sell signal. By default, it is set at 1.01. I have made mine a little less sensitive and have adjusted it to 1.25. If I dialed that value up a little bit more still, maybe to 1.5 or 1.75, it would have picked up this Raptor signal right here. The reason it did not pick it up is it's the time between the low and the test of the extreme falls outside of the programming parameters. This is why it's helpful for you to be able to recognize the signal apart from the prompts. The prompts are there to help you, to be sure, but it's also useful to be able to look at this chart and say, oh, downtrend, test of the extreme, reversal signal. Hey, that's a number 2 counter trend signal, our soft edge buy. And so far they're trying to get up here. I'm going to raise my break-even trigger just a little bit. And John, I will show you the pound US dollar pair in just a moment. The other part of David's question, who is doing that? Who are the big players in futures? You know, when we take these orders, it's very rare that we are trading against other traders like ourselves, the small speculators. There's always the chance that there's a small spec taking the other side of your order, but it's probably Goldman Sachs. That's probably who's on the other side of your trade. They trade a lot in the NASDAQ, but you never really know for sure. But yeah, Goldman Sachs, Bank of America, you know, any of the big Wall Street firms are the big players in the futures market. And what percentage of market activity is comprised of relatively small individual private traders like us? We're the pikers. Not a huge percentage, not volume-wise. Obviously, on a per capita basis, there's loads of us, but as far as trading volume goes, no, that's all the big hedge funds and commercial specs and guys like that. We are the grease between the wheels. Yeah, David, you just sent me a screenshot. No, I don't think that was a technical error. That was just me pulling the chart over. So I had somewhere to do a little bit of drawing. Okay, get up there. Yeah, and Tony points out here as well as regarding the big trading firms, the hedge funds and so on. He says their orders could be 2 weeks old, and that's true as well. Like a lot of them will just place orders and let them sit there until they get filled. Traders have different agendas. You know, the market may be going down, but there are obviously buyers and there are obviously sellers, and both sides can be making money here because they have different agendas. Not everybody is like us, where we're only looking to pick up 100 or a couple $300 or maybe $500 on a monster move. You know, there's traders in here who are just looking to scalp out, get their little $50. There's the high frequency traders who are already come and gone a half a dozen times. I think David was asking about the quants and the algos. Oh yeah, there's a lot of algo trading going on, a lot of high frequency trading. Thing people forget about the high frequency trading firms. They think, oh, that's the way to trade. Trade like the arb traders used to do in the pits. The high frequency trading firms with their very sophisticated computing programs actually burn out their programs within about a week. That's how quickly the market adjusts to what's going on. And they need to mix up their programming to try to keep a little bit of an edge. So, it's not like they have any significant advantage over us. Well, their biggest advantage, of course, is their data speed, right? That they can see the orders and get in there and profit from a tick. Or if they were doing stocks, what we used to call the teenies, just grab a 16th or an 8th and get out. Oh, not liking this, getting a hard edge sell now. That's going to be like a double pullback. Really need to see the market get back above this level right here where my break-evens trigger was or is. Okay. Yes, Steve is reminding me about crude oil. So let's go take a look at crude oil. And I haven't forgotten about your pound US dollar, John. I will get to that as well. All right, so here's crude just prior to inventory. And, we've got a fairly decent range that we can bracket, but we're trading at the bottom end of the range, which is not all that inviting. We do have a counter-trend signal already in play, which makes me think maybe the crude oil market is going to dip off a little bit. We've still got a couple of minutes to make that work, so I'll hold on to that for just a moment. David asks, thanks for the info. Follow-up question, do the big boys ever move the market in futures to shake off us smaller traders, i.e. hit our stops? Oh yeah. Oh yeah. But it's no secret. Everybody knows where the stops are. Everybody knows there's stops below here. Everybody knows there's stops above here. It's not like it's a mystery. And yeah, sure they will. If they're looking to short the market heavily, they'll try to run it up, tag a few stops, engage a few more sell orders, and then, or pardon me, buy orders, and then move the market the other way, of course. That's why when I'm looking at stops, I always recommend looking 2 swings back. So for instance, if you chose to take this order, there's swing 1, there's swing 2. That's going to be a much more difficult stop to hit than this one. Very often, like in this case, the bears would let the buyers move against them once, but they won't let them move against them twice. Again, it's just one of those things that's kind of like the nature of the marketplace. I'm not sure how I want to bracket this OCO order on crude, Steve. It's very neutral, I suppose. Well, I don't really want to enter below there. That's a little far away. I guess it's only 15 ticks, 16 ticks. I could short below the primary support and buy above the secondary resistance. Or we can always just let the report come out and then bracket. All right, well, hey, it's a demo room, so allow me to demo. So if you're using the OCO order, we're not going to be using the trade manager down here. We're actually going to be placing our orders on the chart by right-clicking, and I'm going to do a stop limit order, and I'm going to allow only 3 ticks slippage because, hey, this is crude. So I'm going to sell a stop limit there, and I'm going to buy a stop limit above the high. I like that. There we go. I can live with that. We're kind of in the middle of this range, and we'll let the market determine which way it's going to go from here. Yeah, Steve says it looks a little better on the Falcon. The Eagle is actually looking pretty good too. There's the Eagle. You can see it's a slightly better channel type formation. But we'll stay with the Raptor. I know there's a few new Raptor traders in the room. Now, as we get into inventory, which is going to release any moment now, we're going to see the Geiger counter go crazy. You see the orders right now, they're all little onesie twosie type stuff. We're going to see some pretty big orders flow through there. The Geiger counter, if it's a good report, will start going a little bonkers. And I should have a stop and play. Wouldn't that be helpful? And once we are finished with the crude inventory, I will get to John's question about the pound US dollar pair. I'm going to have to look at it on the 6B though, John. I don't have the Forex pair available to me right now. Okay, so far the primary support is holding. Checking out now the top end of the trading range. So there is you can see relative to how the trading was, how many more orders hit the floor as the inventory report was released. Just huge volume going through here now. See, in the hundreds. Oops, come on, don't be like that. So getting a little bit stuck here at the secondary resistance line at 49.33. And here on the Geiger counter, you can see how the orders have subsided a little bit, but oh, the Geiger counter, there we go. It was pulling and holding to the buy side, which is encouraging. There we go. Come on, get up there. Get up there. Get above that resistance line, and we should get a little bit of breathing room. There we go. Oh, Tony says, I was too tight with my OCO and got a whopping $55 out of that nice move. Oh well, at least it's 55 to the good, right? Okay, I'm going to do my best to be patient here, but very often once we see a big run up in crude, there is a tendency to try to reverse on itself. So I'll get a more aggressive stop ready. How are we doing with open profit? Oh, 200 bucks, nothing to sneeze at. All right, so that was our crude trade. We got stopped on that little reversal. Now here, the pound US dollar pair, or the 6B. Same thing, they're going to move the same. I have it on my faster chart only because I've got crude oil running on the other chart, on the standard settings. But you can run the pound with the default settings or the faster ones. It really doesn't matter. They are getting near the end of their session, however, so you want to be careful about what kind of signals you take. But if I dial it back here a little bit, here's the London Open, and we got a nice little cloud crossover. Took a little heat on the trade, but again, this is why you don't want to have your stops ultra tight. Right? If you take a look at, sorry, I need to refresh my chart here, one sec. All right. So, why am I not getting my, all right, let's try reloading it. There we go. Okay, this is why we don't want to place our stops ultra tight. Like, so many traders have the idea that I've got to keep my stops so tight to make this trade work. But if you're using a percentage of your trading capital and this amount is going to be fixed, in other words, you're going to be risking between $375 and $400 regardless of where you place your trade, why would you not place a more liberal stop, a stop that gives you a little bit more staying power? Now, your eye can be drawn to the hard edge because of course if the market reverses, it will have a tendency to move to the hard edge. If you're using the support and resistance suite, we have the primary support, or pardon me, primary resistance right here. Nope, sorry, had it right the first time. Primary support, you can hide it below there, or the best stop, of course, is still the swing low. Your stop can always be adjusted. This is your safety net. This is your worst case scenario. So what happens from here? The market goes up a little bit, comes down, and of course if you had the tighter stop, you would have been stopped out for a loss. If you were at the hard edge, you would have managed this trade well, but you see, here's the whole point. Just by being able to hang in there a little bit, you're actually able to realize a profit versus a small loss. And I don't know about you, but I would always prefer a profit to a small loss. It followed up, it looks like about a half hour later, with a hard edge bounce, several hard edge bounce signals. This one right here, by the way, is your double pullback. That is your double pullback signal. So what happens here is the market pulls back into the cloud, comes out, produces a signal, does it again, and that is a high probability signal. That's actually the fourth signal on the Raptor, but it was too many variables to program, so you just have to keep a lookout for that. That's the double pullback signal, and you can see that tends to have some very nice follow through as well. So if you get a couple of number 3 signals printing side by each, don't be afraid to get on board there. That's a very strong signal, pardon me. And then the market starts to unwind a little bit into the North American Open. We get a little bit of a dip, and then we come back. We got the cloud crossover signal. And that's kind of where we're at right now. So looking for the British pound to maybe put in a little bit more of a rally. I'm kind of optimistic on the pound, like from a longer term point of view. I think that it's okay to be bullish on the pound. Oh dear, looks like I should have paid a little bit more attention to this trade. It ended up backing up on me. Doggone it, Eric, stop that. There we go. See, here's that double pullback signal again. And I guess I'll have to check the paperwork, but I think my stop was still relatively deep. 56.51. Oh yes, it was very deep. It was still below here. But like I said, that's what your stop is for. It's a safety net. It's there to keep you from blowing yourself up. All right, John and David both have questions here. John asks, I set up 2 targets. Target 1 was hit, the whole trade was canceled. What did I do wrong? All right, did you set manual targets? For instance, did you go down here to click targets? And are you certain you had 2 contracts available. Oops, 1 second. Stop it, Eric. I'll get it yet. Hold on. There we go. So if you did it that way, and you're sure you're trading 2 contracts, then I'm not sure why it happened. What tends to happen, though, is people will set up thinking they have 2 targets in play, and they're only trading, oops, in this case I'm still trading 2 contracts, but what ends up happening is they're only trading 1 contract. So that would be the first thing that I look at. But if it happens again, don't hesitate to email Ben. And if you can do a screenshot, if you can save an image, that would be most helpful to him. All right, so it hasn't printed yet, but this is the makings of yet another counter-trend signal. Oh yeah, there we go. The hawk is already into yellow bars. Now we're working a possible green bar sell on the hawk. That is a signal that we can take counter-trend. Oh, do I really want to try this again? You know, I think the market is finding a little bit of a bottom, and well, it's been in decline since the open, so over an hour. It would not be out of the question to see a possible short-term reversal here. After this morning's move down, I don't think the buyers have it in them to do a full-on reversal. We've got a trend change signal here now on the Falcon. So there's already a buying opportunity. And a good opportunity for a second push on the entry. John, I take it from your question that you are trading the Forex, and John's asking, is the quantity a standard lot? No, because it's futures, or it's preset for futures. Sorry, I should say it that way. Your quantity will be just a single unit. So what you're going to want to do, I want to make sure I'm not going to mess up the trade here. Okay, what you want to do is you want to go into your trade manager. So go here to your strategies window. Go to your trade manager. And you'll need to disable it before you make any changes to it. So you go here to your Enable tab, click on Faults, and apply it. And then here your quantity. I thought there was, you're going to have to bear with me. I don't do Forex very often. I think this is the one we want. We're going to change this to a whatever, if you're going to do 100,000 or if you're going to do 10,000 or even 1,000. I think that's the one we want to change. Ben knows better on that, but let's just try it here for. Once we've made our changes, go back here to your enabled tab, click on true, apply it, and let's see if that worked. No. If you are in your risk percent mode, however, it will automatically round your quantities correctly. Otherwise, I think you may need to enter it here. And then you will be in manual mode and you can take your trade accordingly. But do double check with Ben, and he will be able to confirm that for you. Yes, I'm sorry for you Forex traders that I'm a little rusty on my Forex. But a good thing to do as well is if you're trading in Sim is just play with the trade manager a little bit. It will you'll learn a lot by using it that way. All right, so now to David's question. All right, so David asks, out of the box, Raptor's execution management add-on trade manager seems to come with some default settings wherein when one simply clicks the big buy or sell buttons at the top, it immediately pops in a whole order structure complete with suggested stop and profit target. Could you please speak to A, the building of a good flexible default, and B, make it clear when one goes to manual constructing of the other components? All right. So what David's asking is if I just hit the buy and sell market buttons up here, I'm going to get a complete order providing I have my stop strategy enabled. So if I just, out of the blue sell the market, I will have, according to my stop strategy, Trade Manager calculates I can take 2 contracts and I have my profit target already enabled. And I have, well, in this case, I have my break-even trigger turned on as well. I wanted to get that back into profit before I closed it. So yes, the Trade Manager does have the presets there. Of course, you can change them. You can change your profit objectives. You can select a different stop strategy, and that will affect how many contracts are in play. I only use the buy and sell market buttons if the market is moving too quickly for me to actually frame a trade the way I might like it. If I think the market is running away on me, I'll just hit the buy or sell market button so I can get into the trade, and then I'll deal with it. So you're asking, could you please speak to the building of a good flexible default? Well, I think by and large it uses the ATR as a default, and that's fine. Like I said, if you just hit the buy and sell market buttons, that's only to get you into a trade, right? So now I'm short. If I don't like this stop, I can turn it off, I can adjust it, or if I want to change to a different stop strategy, let's say that one's enabled and I don't like it, I would rather maybe go with a percentage stop that's a little bit further away. I can just click that, or I can manually move my stop back. So you do have options available to you. Like I said, the buy sell market buttons, they're only there to get me in right out of the gate. I don't mind the ATR as a starting stop strategy. It seems to work well enough. The only time I really go into manual mode is if I want to restrict my exposure. If I only want to have a single contract in play. And that's usually going to be on a counter trend type scenario. So if I'm looking at, say, this counter trend signal here, and I forget how exactly I set this up, but if I set it up when I'm in risk mode, risk percent mode, I don't necessarily want to have $400 on the line. Unless I'm going to go all in, all out, maybe. Because it is a counter trend trade, right? And by definition, that's going to be riskier than a with trend trade. So unless I'm going to go all in, all out, I'll probably switch to manual mode so that I can control my exposure and only make sure I'm going in with a single contract. I might be prepared to risk $200 on a counter trend move. I might not be so keen to risk $400 or $500, whatever my account allows. That's just my way of dealing with it. The higher probability trades or the higher probability setups, yeah, go ahead, stay in risk percent mode. When things start to look a little dicey or a little less comfortable, then switch to manual mode. And like I pointed out as well, once you're in a trade, your profit targets are adjustable, your stops are adjustable. So if you think the market is bolting, go ahead, just sell it, and then pull your profit target down to where you want it to be. Move your stop to where you want it to be. It is a seller's market today, folks. Yeah, Steve says, feels like we need one more retest of the bottom. I don't think we're going to get it. If you look at a daily chart, especially the E-mini, and here I'll show you, for the newsletter that I write, I've been looking to short the E-mini for a while now. Oh, they better not have gapped my entry this morning. And you can just see how the market has been struggling. And then here we go. What was the open here this morning? Oh, I think I'm okay. I think I'll have to check my paperwork. I think my sell order was in at 23.74. So it's, you know, the market is obviously getting a little bit top heavy here. It's fighting. It's trying to get above the highs, and it can't. It broke and reversed on itself. Not once, but twice, 3 times if you count this one. This one never really got through. So I don't think we're going to see any bullishness. Not for maybe the next week or so. We're a little bit late getting on the traditional springtime move lower. There's a trading expression that says sell in May and go away. And that's kind of where we're at right now. It took a little while to get there, but it looks like we're having a little bit of a correction. And of course, all the talking heads on TV will be going around waving their arms saying the sky is falling. No, no, not really. Okay, Aspen, I'm sorry I'm a little bit late on your question here, but Aspen's asking at 10:46 Eastern, Eric, is there a Raptor 2 forming after all the dots and triangles? So 10:46, that's going to be right about here, I think. So, again, the number 2 signal is a counter trend signal. 2 things we need for a counter trend. We need to have a trend, and we need to have a test of the extreme. Now, I know it printed a counter trend signal back here, and you're probably looking and saying, well, where the heck was the test of the extreme there? It actually occurred right here. And it fell within the programming parameters that it did not, even though technically this is a new low, it still considered it to be a failure. And that's why the counter trend signal printed there. We did not get a counter trend signal here because there's no retest yet. There's no test to the extreme. At this point, had the market reversed and gone up, we would have printed a counter trend signal on the next buy. But no, Aspen, that was not a counter trend signal just yet because we did not have the test of the extreme. Try to look for that. Try to remember when you have, before you go counter trend, you want to make sure the market is actually faltering and it's not going to follow through. And it is oh so tempting to try to buy. I don't know what it is about us traders. We're all contrarian, I think. Maybe because we can see what happened here, we can't see what happens here. Right? It's hard for us to imagine, oh, the market can go lower here. Oh, no, it'll go back up here. I think that's just how the human brain is wired. But it's important you don't see stuff that isn't there. Is it possible the market's going to retrace? Definitely. It could make a retrace here to 56.45. That's a very realistic possibility. But it's probably going to be safer to stay on the short side right now. John's asking, do you have the win rates for the Raptor 3 signal? I don't have anything computed. It's been a little while since I ran the Profit Finder. When I ran the Profit Finder last time, I think it was coming in at around 83%. But here's the thing about win ratios. I can give you a very, very high win ratio. In fact, I can tell you right now how you can have a 98.5% win ratio on the E-mini S&P. And no, I'm not making this up. I can tell you how you can be correct trading the E-mini S&P 98.5% of the time, almost 100% of the time. Trade for one tick. Big deal, right? So you make $12.50, you owe $4 or $5 in commissions and fees. Fees another $5, so you're lucky to walk away with a couple dollars for all your effort. Not really worth your while. Win ratios are a function of the profit target and the stop loss. You will get a much higher win ratio with a tighter profit target and a loose stop loss. There is a very good probability that this trade will hit its profit objective before it hits its stop loss. There is a less or a lower probability that the market will hit its profit target here before it hits its stop loss. There is a very low probability that the market will hit its profit target before it hits its stop loss. So you see, it's always a function of the profit target and the stop loss. That's why I always chuckle when I get these emails in my inbox saying, new trading system performs 93.7% of the time. Well, I know how they're doing it. It's a bunch of baloney. They're running a stop loss way up here, and they're having a profit target, you know, way down here. That's very easy to get to. Yeah, sure, I can do that too. But is it profitable? That's the big question. And you should know that Wall Street goes over the moon for a profit or a system that performs 55% of the time. They are thrilled to death. So why isn't Wall Street buying that system that performs 93.7% of the time? Because they know it's a bunch of baloney. They know, like I just pointed out, very loose stop, very tight profit target. But if Wall Street has a system that gives them even the slightest edge, even if they can be right 55% of the time, they don't care about the other 45%. They know they can make money. In fact, I've shared with you guys before that one of my most profitable months on record, I was only right 45% of the time. It's either 40 or 45%. The point is, I was wrong more than half the time, and yet it was one of my more profitable months. Why? Well, because I managed my stops correctly and I managed my profit targets correctly. So while it's very sexy to say, yeah, hey, that signal performs 80% of the time, try not to get too hung up on stats like that. Yeah, Andre says, I've noticed that you can't adjust your stop deeper than your original stop once a trade is live. Actually, you can, but what you need to do is you need to physically pick it up and move it. So here, we'll sell one more time. So my original stop is here. Let's say I go with a percentage. No, that's not going to work. Let's say I go with a swing stop. No, that's not going to work either. I got it. All right, we'll go with the bar high low, and we'll go back like 30 or 40 bars. Come on, work with me here. Okay, so there's my stop. Once I enable it, no, the trade manager will not roll it back there. However, I can get my stop up there by manually grabbing it and moving it higher. But once you're going to have to disable your stop strategies because the trade manager, as you just saw, once it turns itself back on the very next bar, it will snap your stop back to its original placement. So in order to prevent that, you actually need to turn your trade manager off. Aspen says, I get a few counter trend winners, 2 winners, but I need to place fast trail stops, preferably 2 bars below. Yeah, that's a good plan, actually, Aspen. You know, anytime you're moving against the trend, you don't want to hang around too long if the market starts to go against you. So the bar high low strategy, that's a good one to use. And for those of you who have forgotten what the bar high low is, it's this strategy right here. And you can set it a little bit tighter. So right now, let's say we want to, well, we're in a downtrend. We want to be 2 ticks off, 2 bars back, 2 ticks off the high. What it does is it keeps the stops very tight and gets you out at the first sign of weakness. So something that, pardon me, is a good idea if you are in a counter trend trade, of course. John's asking, the cloud and the filter both hinting for shorts? Yes, absolutely. The cloud, very, very bearish. The filter, also very, very bearish. The danger is when the cloud becomes overextended like this. If we had like an oscillator on here, like a stochastic or an RSI or any of those types of oscillators, we are very, very oversold right now. So we're coming into the lunch hour. There is a possibility we're going to see a little bit of profit taking into the lunch hour that could rally the market up a little bit, but I don't think the buyers are going to reverse this market sideways, maybe. Hey, Jay Kishan, I hope I'm pronouncing your name right. It says, I just got the Raptor yesterday. Well, fantastic. Please don't be shy about asking questions. I will do my best to point out the signals to you and help you understand how to use the Raptor. Well done, Aspen. Aspen says, all my Raptors 1 and 3 gave me good winners, plus 180, and a $125 loss for a $685 on the day. Nicely done, Aspen. Aspen writes, still need to know when the Raptor 1, 2, and 3 forms, trying to get a good gauge. It is a little bit of a learning curve. I can already tell, though, from your questions when you first started that you're picking it up. Nicely done. Okay, Jakishan is asking, I believe the trade manager manages my position size. How do I know where to determine stops and profit targets? Any videos on the subject? Yes, there is a bunch of videos at the members area. But here's the Reader's Digest version. Typically for the Raptor, we have $100 profit objective. So if you're trading the NASDAQ, which is $5 a tick, that's the chart we have right here, I need 20 ticks to get to my $100 target. If I'm trading gold at $10 a tick, I only need 10 ticks to get to my target. So I would adjust that. If I'm trading the S&P at 12.50 a tick, I only need 8 ticks. So again, I would adjust the target. For markets that move faster, for instance, gold or crude, some of the other energy markets, I have a tendency to double the profit objective. So in a market like crude oil, instead of having 10 ticks, I would probably have a 20 tick target. But the profit objective is a dollar value. All right, so typically, a typical Raptor move, we look for a $100 move. Stops. Well, you have many options for running stops. Some people just like to use the recommended stop. So let's say we were looking at taking this short signal here. So we've got the number 3 signal. It's currently against the ATR. So what I can do is I can adjust my stop. Oh, that didn't help. I can change my stop strategy to get one that is on the right side of the trade, right? Because obviously I want to place my stop above if I'm selling. In which case you could set up your trade like this, where you're just going to follow the recommended stop strategy, and there's your trade. You hit your submit button, and away you go. The way I like to do it, however, is I tend to be a little bit more conservative with my stops, at least at the beginning of the trade. What you're going to see me do very often in the trade room is leave a rather liberal stop to start and allow the trade manager to balance out my risk and my exposure in the market. The reason is I don't want to strangle the trade. I don't want to get into a trade like this only to have the market bring me in and then, you know, just look back a little bit, stop me out, and then go down to my profit objective without me, right? I don't want that. So rather than keep my stops ultra tight and potentially strangle my trade, I tend to leave my stops a little bit deeper. And my rule of thumb is to go 2 swings back. So there's swing number 1, there's swing number 2. That's probably going to be my initial stop. Now, I should point out that Trade Manager and the whole Raptor DTS system is very good at picking up market momentum. Probably 9 times out of 10, when you print a signal, you will get immediate market momentum and follow through. So in that respect, I'm a little bit of a chicken, I'll admit. I would rather keep my stop out of harm's way, at least to start, even if it means getting into the trade with fewer contracts and giving up a little bit of potential profit. To my way of thinking, this stop loss is my safety net. This is my worst case scenario. I only want it there in case something catastrophic happens and the market reverses and I have no chance to adjust my trade and get out of the position. Here, actually, let's use this signal right here. This is a slightly better setup. Okay, so here we have the number 3 signal printing, just like before. And if I place my stop even right above here, you're going to see the market brings me in, reverses. Oh, actually, they didn't stop me out. I thought they stopped me out. But pretend for a moment they stop you out, and then what happens? They go down to your profit target without you. Worse yet is to take a trade and place your stop right there. You have almost no chance of hitting your profit target before hitting your stop loss. So I guess what I'm trying to say is your original stop should be a little bit more liberal in that it gives you a little bit of room to ride out maybe a minor swing, so that you actually have a chance to get to your profit objective. I hope that makes sense. When in doubt, a wider stop will serve you better than a tighter stop. Okay, Jake, good. All right. Well, it looks like we're seeing a little bit of a pullback now. We did get, I'm surprised we didn't get a number 2 signal printing on this little Raptor signal right here. I think the retest may not be as deep as the programming required, but let me show you here. If we go now to the Raptor, and we go down here to the soft edge parameters, by default they're set at 1.01. You can see I've increased mine to 1.25. What if we made that a little bit more aggressive still? Nope, still didn't print it. Let's try it again. Let's dial it up to 2.0, see what it does. Aha, see? So by making it a little less sensitive, it actually printed the signal. Now you might be wondering, well, you know, should I dial up my Raptor then? Should I make my signal less sensitive? You can play with it. The one thing about the new Raptor, of course, is it is much more tweakable than the other Raptor or DTS birds, or the previous Raptor, I should say. So you have the ability to make changes this way, but chances are you probably noticed that this was a counter-trend signal anyhow. What do we need for a counter-trend signal? Well, we need a trend, and we need a retest of the extreme. In this case, the extreme is the low, and now the market is trying to put in a rally. The target would be the hard edge. There's the number 2 signal, even though with the lower parameter settings it did not print. And there we are, hitting our profit target. You may choose to leave it at the higher setting. Just roll through your chart and make sure you're not getting too many counter-trend signals, right? The higher setting is going to produce more signals, and more signals is not always what we want. So long as the signal has decent follow-through, you'll be okay. But, well, this one, I guess if you were right on the hash mark, that one engaged. That one gave you a little bit of heat, but did have some follow-through. So even leaving the Raptor setting as high as 2.0, looks like we're not getting too many false signals, which of course is what we're looking to avoid. We don't want to get a reversal signal on every counter trend bar. Yeah, Andre says you can always try to use limit orders. That'll make your stops a little bit smaller. That's true. The problem with limit orders is that you tend to be a little bit more predictive. So because a limit order has to be below the market, I could set up a trade to try to buy here. Oops. could try to buy down here. Oh yes, I forgot. I still have my 100,000. Here we'll go. So we go with a limit order. I can try to buy down here and place a stop there and hope that the market reverses. The other way you can use a limit order is we're printing a counter trend or a trend change signal here. Yeah, and Andres, I was just going to point that out. Andres says you can wait for the signal to print, as it did here, and engage. And now you can try to catch the market with a limit order and hope that it looks back and engages your limit order, which it will do most of the time. Or I even knew a fellow who would go 2 ticks back. So if there was the entry there, he would go back a couple ticks and try to catch it a little bit lower. Most of the time it worked for him. Every once in a while, the market didn't look back far enough and it would go on without him. So it's a trade-off. You know, as I've said before, trading is a very personal business. You have to go with what is comfortable for you. After all, at the end of the day, it's your money. I can tell you what I think is the best course of action, but you don't need to answer to me. All right, boys and girls, I think we're going to button up shop here for this morning. And morning session's pretty much expired anyhow. Like I said, you're going to want to stay bearish today, even though I would not be surprised to see a little bit more of a pullback before the next leg lower. I seriously doubt the buyers are going to muster much of a rally. It's probably going to end up going sideways through the rest of the day. I will talk to you tomorrow. We'll see you then. Bye for now.